Sofi Technologies is a hidden gem in the stock market that has tremendous potential to reward shareholders in the coming years. We will show you how Sofi is poised to capture the attention of investors and generate significant returns in the next decade. Stick around until the end to find out how much stocks and how much will be Sofi after 2032. Let's dive in. Our confidence in Sofi's growth trajectory is based on three key components. Firstly, we expect the company to continue expanding its fundamental operations. This will provide a strong foundation for future growth. We have analyzed Sofi's key metrics, including their membership base, products, sub-products, technology platform, and revenue streams, and have observed a remarkable growth trend from 2019 to 2022. Despite the pandemic-induced digital banking trend, Sofi's growth trajectory has continued to be impressive. Sofi's growth is not limited to just the pandemic period, as they have sustained accelerated growth rates in various metrics such as members, revenue, and EBITDA. In fact, they have been outperforming the broader markets consistently. Furthermore, we believe that Sofi is yet to realize its full potential, and there is significant room for further growth in the future. Sofi's focus on direct deposit clients is a strategic move that is expected to increase the average revenue per user and per product. For instance, in their latest quarter, Q4 2022, Sofi reported a significant increase in their financial services average revenue per product from $21 to $40 on a year-over-year basis. This represents almost a doubling of their revenue in just 1 year. Additionally, Sofi's technology platform, which they sell to other financial institutions, is also growing at a faster rate than the broader market, indicating a further potential for revenue growth and potential stock price increases. We believe that Sofi's fundamental expansion will be a crucial factor in driving the stock price up over the next 10 years, accounting for approximately 45% of the overall price increase. Moreover, with their continued growth in revenue and a strategic focus on direct deposit clients, Sofi is well positioned for sustained growth in the future. Moving on to the second point, let's talk about stock valuation expansion. Again, it's essential to consider this both from an overall market point of view and a Sofi-specific point of view. Sofi is unique in that it's viewed as both a bank and a fintech, and the valuations of these two industries are vastly different. For example, the average price-to-book ratio for banks is around 1.1 times, while the average for fintech is around 6.2 times. However, Sofi's current price-to-book ratio is less than 1 times, which is lower than many of the largest, slow-growing banks in the industry. We believe that Sofi's price-to-book ratio could more than double from its current level. Moreover, if Sofi can maintain its impressive growth trajectory, we anticipate that its price-to-book ratio will increase significantly over the next 10 years. While this analysis focuses on Sofi, it's worth noting that Sofi is just one player in the vast ocean of the stock market. Moving on to the micro environment, it's essential to consider the impact of market sentiment on Sofi's stock price. Looking at the widely used valuation metric of the price-to-earnings ratio (PE), mid-cap stocks like Sofi currently have an average PE ratio of 13.1, which is below the usual range of around 17. When we narrow it down to the tech sector, the average PE ratio can go up to 22.4, representing a potential increase of 71% from where Sofi currently stands. Despite the higher risk involved, mid-cap stocks have historically outperformed large-cap stocks by around 1.3%. With this in mind, between Sofi-specific metrics and the overall market sentiment, we believe that stock valuation expansion will account for 40% of Sofi's growth over the next decade. To sum up, the third principle for Sofi's growth is demographic growth, which can be divided into two categories: market trends and user trends. In terms of market trends, the overall digital banking industry is expected to grow at a CAGR of 19.9% until 2030. Additionally, the technology space is offering virtual cards, embedded finance, and other products that are also rapidly growing. To retire on SoFi stock after 2032, we recommend holding close to 11,000 shares, which we believe will be worth over $91.18 per share at that time. This represents a 16 times increase in the value of SoFi stock, or 32% compounded annual growth rate. While it may seem challenging to achieve such returns, given that the stock market typically returns around 10% per year, we are confident in the potential of SoFi. As of April 22, 2023, SoFi's stock price is $5.96. Thanks for tuning in. Let's get back to the video. The market trends and user trends are two tailwinds driving the growth of SoFi's business. In terms of market trends, the digital banking industry is expected to grow at a compounded annual growth rate of 19.9% until 2030. Moreover, technology products such as embedded finance are growing at a compounded annual growth rate of 60% for the next 5 years. The global virtual card transaction total is expected to reach $6.8 trillion, a growth rate of 29%. In the B2B sector, the compounded annual growth rate of cardholders is expected to grow by 16.5%, and 93% of businesses reportedly want to get into virtual cards. SoFi could expect this growth even if they do not take more market share as the industry grows. Still, SoFi is taking market share as evidenced by the news that deposits in banks are becoming a severe problem, while SoFi is having the opposite problem. In summary, the demographic growth is one of the two tailwinds that are driving SoFi's business forward. There are two categories under demographic growth: market trends and user trends. The overall digital banking industry is expected to grow by a compounded annual growth rate of 19.9% until 2030. SoFi is well positioned in the technology space, offering virtual cards, embedded finance, and other growing products. On the user trend side, millennials, the exact audience that SoFi targets due to their age and acceptance of technology, will soon become the most prominent living population, and mobile technology for online banking has seen a massive increase in usage after the COVID-19 pandemic. Additionally, the demand for financial services is expected to increase by a compounded annual growth rate of 14.8% through 2026. Making the global online financial services space an $8 trillion market. Overall, the demographic growth is expected to make up for about 50% of the overall increase in SoFi's stock price over the next 10 years. To wrap up, Anthony Noto, CEO of SoFi, envisions SoFi becoming one of the biggest financial institutions globally. He believes the key to achieving this goal is to become a household brand name, as SoFi's strategy and consumer value proposition are best in class. They own the end-to-end stack, allowing them to innovate faster and at a lower cost. While there are more cards to flip, the company has all the key economic pieces in place as of 2022. Noto stresses the importance of scaling the people, processes, and technology to ensure a safe and trusted user experience. He is determined to make SoFi a top 10 financial institution within the next 3 to 5 years. Despite industry disruption and uncertainty, Noto remains focused on executing tirelessly and is open to other opportunities that may help SoFi achieve its goals even faster. So there you have it, folks. A comprehensive analysis of Sofi Technologies and why we believe it's a company worth considering as a long-term investment. We've looked at its financials, competitive landscape, and growth prospects, and we're confident that SoFi has the potential to become a household name in the financial services industry. If you found this video helpful, hit the like button and subscribe to our channel for more investment insights and analysis. This is Fred. Thank you for watching and see you in the next one. If you want to see more on why SoFi is still a great buy despite the SVB's collapse, check it out in this video.